Good afternoon, everyone. This is Trader Tim, eMoneyMine.com. Today is the 30th of January 2017, and we have pulled back to the next 50% retracement. Right now, I've got the previous one drawn up. We pulled back to 22.28s at the end of 2016, rallying up to the 22.96 target. And if we pull from that same low, that entry low, up until the new high, also our most major swing low back here, this morning, Monday, we've pulled back to the next 50% retracement, 22.62. And that has a target above us at 23.12. Just above that is the negative 61.8 of the super large daily retracement that's below us from 20.86s. So all signs pointing higher. If we take a look at the broad market, they're all kind of setting up the same. S&P, Dow, also a hammer, NASDAQ, hammer as well, and the Russell. So we'll see. Tomorrow will be very telling if we can get up and over today's high. That being trading hours only is 22.8125 on the ES. Tomorrow we've got consumer confidence, half hour after the bell, employment on Wednesday, as well as the FOMC meeting announcement in the afternoon. So Wednesday going to be a very cautious day. Would not recommend trading Wednesday afternoon. Thursday jobless claims, and Friday employment situation. So between some of these executive actions that Trump is trying to instate and the FOMC meeting on Wednesday, there could be a lot of whipsaw action in the market. Even though the VIX is low, down below 12, we've got the potential for some gaps and for some big market moves. If we can break above today's high at the open, we could see a very strong trending bar that takes us to new highs or a series of 2 or 3 days of big body trending candles. So we'll be trading tomorrow morning, eMoneyMine.com/VIP, where you can find out more about that. But looking good, we've got this bed down here, this floor, if you will, of sideways consolidation. Markets not only pulled back and just about touched the 50, but bulls stepped in at what was recent highs, now acting as support. So a healthy looking market, despite what economic or national global issues might be currently discussed and debated upon. The market's looking pretty healthy and is really on its way. S&P up to that 2300. That would be the next big level in the S&P, big round number. So let's see if the Dow can get up and over that 20,000 again and stay there for a longer time. But in the meantime, if we can't get over today's hammer, the high of today, then dipping down and touching the 50 again, not a huge concern. If we open up and just kind of drift lower, maybe approach 2260 and then start to round out and then take off again. Still bullish, but if we come down and break 2254s, as well as we've got a swing low down here at 5175 and a little bit lower at 4850, those two being taken out would be a much more major break. And certainly if we came all the way down to a 2228 and broke that, then we have a serious break in the uptrend just by drawing the trend line from down here. You can see, just connecting some of these lows, the market, coming down to the trend line, getting a nice rally, moving sideways, drifting down to the trend line, a little bit of a rally to new highs, sideways to the trend line, drifting higher. So, that's been the pattern for 1, 2, 3, now 4 touches, if you will, of the trend line. So if we continue, then it would be expected that we could come up to this 23.12 level, move sideways, touch the trend line. But if we start breaking down, if we break today's low and break below the trend line, break the swing low more importantly, then we have a broken trend and a completely new trend would begin setting up. And it's at that point, if we break this 61.8, since we've been in a nice series of daily long setups, if we break these swing lows and the market does start to sell off more than just down to the 2260 level again, then we can take from highs to lows, on a 50% retracement and start trading in the opposite direction. So drag from highs to whatever the lows end up being below the most recent swing lows. Those would need to get taken out before I would start taking shorts. And then we could end up taking daily short setups down into the next larger 50% retracement around the 2288. So that's kind of how the flow of trading in one direction, market breaks a trend line, and then we start trading in the other direction, and then we see if the market comes all the way back to its larger 50% and gets a reaction. That can be done on the daily chart, a 15-minute, 5-minute, 60-minute, 512 tick chart. Same concept, all markets, all time frames, very simple and easy to transpose. So I hope you all have a great week of trading. Shoot me an email if you have any questions, tim@emoneymind.com.